Your firm is contemplating the purchase of a new $720,000 computer-based order entry system. The system will be depreciated straight line to zero over its 5-year life. It will be worth $75,000 at the end of that time. You will save $260,000 before taxes per year in order processing costs and will be able to reduce working capital by $110,000. This is a one-time reduction. If the tax rate is 35%, what is the IRR for this project? We'll begin by calculating the project's operating cash flows. We were told the project would generate $260,000 before taxes per year in order processing cost savings. From this, we'll need to deduct $144,000 in depreciation expense. This can be calculated by taking our $720,000 project cost, which was going to be depreciated straight line to zero over a 5-year life, and dividing it by 5. This results in a change in taxable income of $116,000 per year. If we have an increase in taxable income of $116,000 per year, we'll have to pay an additional $40,600 in tax expense. This can be found by taking our taxable income and multiplying it by the 35% tax rate. Thus, we will increase our net income by $75,400. To calculate our operating cash flows, we'll take our $75,400 increase in net income, add back the $144,000 in depreciation expense to realize an operating cash flow for our project of $219,400 per year. Let's go ahead and enter this on a timeline of cash flows for our project. Next, let's enter our project cost in our timeline. Our project was going to cost $720,000 at time zero, and it was going to free up or reduce our working capital by $110,000. The reduction in working capital result in a cash inflow of $110,000. At the end of the project, when we scrap our new computer-based order entry system, our working capital will increase by $110,000. This will require a cash outflow of $110,000 in year 5. Our after-tax salvage for our equipment is $48,750. This is the $75,000 after salvage value times 1 minus the 35% tax rate. Let's go ahead and sum up all of our cash flows. The last step in calculating our internal rate of return is to enter our cash flows into our financial calculator. Recall, our project had a 5-year life, so we'll enter 5 for the number of periods. In the present value field, we'll enter the time zero cash flow of negative $610,000. This is our project cost less the working capital that we free up. The operating cash flow of $219,400 per year will be entered in the payment field of our calculator. And finally, in the future value field, we will enter negative $61,250. This is the $48,750 in after-tax salvage we get from disposing of our equipment at the end of the project, less the increase in net working capital of $110,000. Finally, we can solve for the internal rate of return, which is 21.65%.